Welcome to Markets Now. I'm Michelle Rook along with Nick Tsiolis with Farmers Keeper, and we are seeing a lot of red on the board here this morning, kind of a risk off, Nick, and some of that coming obviously in the grain side of things, soybeans in particular, from the weather. We got some rains falling and some in the forecast, don't we?
Yeah, and that's really outweighing port strikes overnight that we saw in Ukraine at the port of Odessa. But especially looking at beans here that were at really good levels over the past couple weeks. Now that a lot of that rain is coming in, and a lot of the models seem to agree on that, it looks like yields are going to look a lot better. I wouldn't be surprised if that 52 number from the USDA, or maybe 51 bushels an acre, if anything, actually becomes a reality, despite how tough it's been out there.
What about the corn crop? Do you think the corn crop is made yet or not?
No, definitely not. I know farmers don't feel that way. It never
Yeah,
feels made until it's in the bin, anyway, and I totally understand that. But you got to balance that too with a lot of drought-stricken areas that really needed it over the past week, like northern and central Illinois. Certainly not everywhere. Got a great amount of rain that a lot of farmers have been telling us saved the crop from a real disaster, and then a really reliable forecast coming in the next 2 to 5 days here, looking like some good rain events. So that's all weighing there, and any of those drought concerns in a lot of the areas where the crop is really devastated, like in parts of Missouri and Kansas and certain parts of Nebraska. Well, you've got to weigh that with where export demand is sitting right now, and also a shout out to the Dakotas as well. Taking 7 and 8% drops in North Dakota, South Dakota, and then in Minnesota in crop conditions. Certainly, that's a reality there. So a lot of things are in flux, but I'm just always trying to anchor that supply factor that the producers
sure.
always focused on with where demand is at, and we're not quite meeting that right now.
No, we do have some supply issues, especially in corn. But
Yeah.
as far as the weather side of things, how much weather premium do you think we need to take out of this market yet in both corn and beans? Because we're down into some chart areas that are looking pretty ominous.
Yeah, I'd agree with that. And a good indication looking at the demand factor is we're seeing September corn trading down again this morning. We were down below $5 at certain points yesterday, and now here we are again. But you got to factor this in. Every single day that we advance here, we're getting closer to harvest and actually having the crop made. So you run out of time for how much premium to the upside can be built into this. The tough scenario that farmers are in right now is, well, am I going to catch a falling knife, so to speak, and sell at these levels because it might not get any better? Or am I just going to sit here and wait for my insurance premiums if I'm not going to produce the crop, and my revenue guarantee will come ahead? I think certainly right now where we're sitting with new crop prices, it's not really an attractive place to sell, but we need to be realistic that it may be the best that we have coming to harvest, especially if those rains really do hit and we have a better crop than expected nationally.
All right, that's a good point that you make. You talked a little bit about some of the things going on over in the Black Sea. How come we can't hold more war premium into that wheat market?
Well, the world is a very complicated place, and things aren't always so simple. And certainly, I'm no foreign policy expert, but a lot of the news that we're seeing, right? Russia's got a really big wheat crop that they're really incentivizing their buyers, but holding back and looking, saying, hey, we need rubles in order to make these purchases at these discounted levels. That's all showing that they've got to really bring in as much currency as they possibly can right now. And that's why there's been rumors from last night that they may be coming back to the table to establish something with the Black Sea grain deal. We've seen over the course of the last 16 to 18 months that this war's been going on, that they play chicken all the time. And this time, maybe they're playing chicken by suspending the deal for a couple weeks, but they seem to come around because they're really in a desperate position. Look at Putin going over to Africa this week, who's really, unfortunately, the people that need food the most, that can't produce it for themselves, that are in a really tough spot. And he's not really getting the feedback he wants there. So it seems like that uh, their willingness to come back to the table and drop prices is pulling things back. And again, any of those momentary shocks, like we saw spiking up prices in the overnight here last night off the news of new port strikes in Odessa, the Ukrainians seem to be as resourceful as ever at getting their crop out there any way they can right now. And if we have an okay crop here in the U.S., that balances the supply and demand curve there.
Yeah. There was also some strikes overnight on the Danube River at one of the ports too. So I think that kind of popped us as well in the overnight session. All right. So Nick, what are basis levels doing out in the country right now?
It really depends where you're at. I think merchandisers are trying to figure out for themselves what their own demand outlook's going to look like for harvest here. Certainly, a lot of levels, mid to upper Mississippi River, are pretty low right now. And from the producer's perspective, you might be saying, well, that's great. We can't load as much grain or anything. But what if we get into a situation like we did last year or a little less than a year ago where they just physically can't load barges? Now that's going to create a backup at harvest where they're just not able to take grain in as they can. That may fit with a lot of people's plans to not be selling grain right now, waiting if and when prices come back up again. But you just got to face the realities and on farm of how much of my grain can I store at all. So a lot of those alternative solutions, right, off the river, like a smaller co-op or going further to an end user, are probably going to have to be more realistic options if we look that way 4 to 6 weeks out from now, weather dependent on whenever we really get started with harvest. Although certainly down in the South, we have gotten started with harvest.
Mississippi River levels, though, certainly not where we were last year at this time or
Yeah.
as low.
Yeah, not quite as low, but still a concern there, and we don't know what's going to happen anyway. But there's a lot of flood warnings in place for parts of Missouri coming in. There's going to be good rains all around, supposedly in the next 2 to 5 days. So that could certainly help things out a little bit here. But most important right now is before harvest, not during. Have those proactive conversations with your merchandiser at the elevator about what your plan is, when you're expecting to bring grain in, whether that's now at harvest or later on, because when it comes down to it and they're going to open up for a Saturday or Sunday or extend hours, you want to have that relationship with your merchandiser to be the one that gets in, that's a preferred shipper of choice for them. So you don't have to worry as much about those factors.
Some good advice. All right. What about livestock producers here? Obviously, a pullback in corn prices here, a bigger crop coming forward is good news for them, but we're still seeing liquidation, aren't we, in the cattle herd?
Yeah, so it's great, especially after the past couple years post COVID here, to see the producer actually getting rewarded by the market with higher prices and not being, you know, uh, in some cases taken advantage of, maybe is the right term, by a lot of the packers. You don't need to tell that to any livestock producer out there. However, I was talking to a handful of our customers out in the Dakotas earlier this week, and it's so dry out there that they're very short on hay. So that's causing them to have to go out and sell earlier and more than they wanted to, just because they can't keep that much on feed. And that's a big issue. You're still getting 1250 or maybe $1,300 a head, but you're not getting that $1,600 price just because you can't fatten them up.
Yeah, something to keep in mind there. All right. Thanks for joining us, Nick Tsiolis with Farmers Keeper. That is Markets Now.